Hello and welcome to Friends That Invest. You're joined by your host Simran Kaur. I'm a financial author and investor, and I'm here to help you learn about all things investing and personal finance. Imagine spending your entire investing education career telling people to not try to time the market. Imagine then trying to time the market and it not going well. This is my story. Let me set the scene for you. It was October 2025 and I said, you know what? I think it's time to sell my NVIDIA shares. It is at an all-time high. Let's make the choice. Let's go ahead. And just to set the scene, this is what the market looked like at that point in time. In October 2025, Wall Street had ascended to a record high constantly, like every single week was like another 52-week high. We had seen a winning streaks in US equities. The Magnificent Seven was like just incredible. It was honestly, you had to be there. And bond yields were falling. Things looked good. International markets were also looking really amazing. The FTSE 100 was at an all-time high, which is just not something you hear me say a lot. And AI was doing really, really, really well. In fact, NVIDIA had reached a market cap of $5 trillion. And so I thought to myself, do you know what? When are we getting close to an AI bubble? I'd actually gone around that point to do a investing education talk at an insurance company. And one of the guys at the insurance company, one of the employees, asked me a question. He said, do you think we're at risk of an AI bubble? And the thing is that one of the signs of a bubble is when everyday people go, do you think a bubble is coming? So I took that. You know, like that saying, it's a bit of a rude saying, but it's like, you know, it's time to sell the stock when the shoe cleaner talks about it, or it's time to sell the stock when the Uber driver talks about it. My theory was it's time to sell the stock when, you know, the guy that works in insurance brokerage, no offense to him, I'm sure he was very smart, talks about it. And so I went and started to look at more information about when do we know a bubble is forming. And I came across this economist called Hyman Minsky, who gained a PhD in economics at Harvard, which now in hindsight, I think could have been like Harvard, Idaho, as opposed to Harvard University, just based on like what ended up happening. But nonetheless, a lot of people actually ignored his views until 2008 when the GFC happened and then suddenly was like, oh, this guy knows what he's talking about. Like the 5 stages of the bubble are exactly what he said. So let me start off by telling you what those 5 stages are and then why I had thought, you know what, this is where we are. And this is what I think is going to happen. In his book, Stabilizing an Unstable Economy, which was published in 1986, second red flag, so long ago, he ended up explaining that the 5 stages of a bubble started off with the displacement, which is when new tech arrives. So think like OpenAI had just released ChatGPT in like November, I think just the year before or the year before that, new tech arrived. The second stage is the boom. Things go up. Everyone's interested, everyone's invested, NVIDIA took off. Then you reach stage 3, which is the euphoria, which is when valuations continue to go up, maybe beyond the point where they make sense. So to me, I was like, $5 trillion for a chip making company, like that is not a normal valuation. Like surely this is time. And then after that, stage 4 is when the profit taking occurs. So this is the part where smart money ends up selling down their shares, but quote unquote dumb money stays invested. Now you might be sitting here and going, Sim, what is smart money and what is dumb money? And you are not going to like the answer. In the financial world, financial bros consider 2 groups of investors. They call them smart money and dumb money. Smart money is institutional investors, smart money is hedge fund managers, and smart money are people that go, oh, this is going to probably drop, let's sell now. And they consider dumb money retail investors, everyday people that end up being left behind when, you know, everything starts to crumble. So an example would be during the GFC, smart money were the people that had insider information that could pull their money out quickly and not be affected, whereas dumb money were the poor everyday people. And when I say poor, I mean like both emotionally and physically, because they had lost everything because they had trusted these institutions. So we don't really like using the term smart money and dumb money. It's very like unkind. And just make it clear, like I am dumb money through and through. And I thought, let me try and be smart. Second mistake. Let me try and be smart and let me sell down my NVIDIA shares because I genuinely think that it has done really, really well. And I don't think it can keep going up. And let me just like agree to sell it down. Another thing had happened when I looked at my investment portfolio. I realized that with my index funds in my core portfolio, I had so many NVIDIA shares made up of my S&P 500, but also the NVIDIA shares that I'd bought individually had ballooned so much that my entire portfolio was like almost 20% NVIDIA. Like that is an out of control percentage. And so I thought, okay, this was 30th October, 2025. I sold down my NVIDIA shares. This is what happened. And let me read you a little blurb that I'd written on my Substack where I said, I don't think I'm smart money. This is me quoting myself. I'm definitely dumb money, but this dummy has realized that she is comfortable with the growth of her individual NVIDIA shares that she is given. And so today I sold all my NVIDIA stock. No need to panic, however, since so much of my portfolio is in ETFs, I still have over $200,000 of NVIDIA holdings through my S&P 500 fund, which is kind of sickening. As a result, being overexposed to AI stocks during a time when I personally think we are moving slowly towards the end of the euphoria phase, lol, means I think I should sell. Then I go, could I be wrong? Oh, 100%. And there is a good chance I am. Spoiler, I was. My AI stocks that I just sold may have continued to ride up for another year, and I would have lost out on those gains. So let me tell you what ended up happening. So essentially, I thought, okay, the market is probably not going to do really well. Let me sell down, and maybe it might do well. I understand I could be wrong, but I'm okay with that. This is what ended up happening. From October 2025, when I sold down my shares, to about March 2026, NVIDIA dropped, and it kept dropping. It was down 18%. And so I had sold at the very top of the market, and I was so proud of myself. I was like, this is what I get it. I guessed the bubble, and I got the bubble at the exact right time to the exact right day. I was so proud of myself. And then from March 2026 to about May, it just rode right back up higher than when I had sold. And so I had sold NVIDIA, it dropped down, which I was really happy about. And then it went right back up and beyond what I had invested. And in May, it was up 16%. Then it dropped back down again. And so at the time of this recording, at the end of July, it is now down again. But had I sold in May 2026 instead of October 2026, I would have made an extra 16% return. And that taught me a very valuable lesson that I was too overconfident. And yes, while I have done well and sold my NVIDIA shares, there was absolutely no way that I could have timed this market. There was absolutely no way that I could have timed the AI bubble. And as I have quoted myself saying, no one knows when a bubble is going to pop until after the bubble pops. So whilst I was feeling pretty good about myself, the bubble did not pop. There was a temporary pop, in which case, like, I felt temporarily really overly confident. But it just reminds myself that there is so much at play. Like, even as someone that spends, I would like to say, a decent amount of time looking at markets, reading market news, like putting all this information together and going, what are the indicators? No one can predict it, and trying to time the market is such a useless use of your time. Like, that is at least 4 hours. I could have gotten back and, I don't know, like watched 4 episodes of Real Housewives of Beverly Hills, and I would probably be net happier than if I had tried to time the market, which is like kind of embarrassing. And you might be listening to this and going, Sim, okay, but like, you know, these things happen. Like, anyone could have made this mistake. And to that I say, no, stop it. You're being too kind to me. The data has shown us time and time again that time in the market is better than timing the market. And what I would have done differently and what I've learned from this experience is that I am so much better off investing in broad market index funds and holding on to companies, individual companies. If I choose to hold on to them, they need to be companies that I believe will do well for 10 years, for 20 years, rather than trying to pick companies that I think might do well for a couple of years. I'll hold on to them. And then when I think it's time, I'll sell them down. Another mistake that I think I made in this situation was thinking that, well, if I sell down my NVIDIA shares, I didn't really think about what will I do with that money afterwards. So let's say I had $20,000 worth of NVIDIA shares. Once I sold it, I was like, wait, where does this $20,000 go? And I didn't exactly have a plan for that money. So I did, what I kind of default back to, and I put it back into the S&P 500. But when you buy and sell shares like this in the brokerage that I have, there is a brokerage fee every time you sell something and buy something. So to sell my NVIDIA shares, it's not a lot of money, but it's like a couple of dollars brokerage fee to sell it, another couple of dollars of brokerage fee to buy back a fund. And if I had lived in a country where capital gains tax gets issued every time you buy and sell, then I would also have tax liabilities associated with it. So I'm losing money based on trying to time the market. First mistake. I'm losing money on the trading fees. Second mistake. And if I lived somewhere else, I would also be losing out by having to pay capital gains tax and kind of starting off the capital gains process. That would be my third mistake. All that for trying to time the market. Why? Tell me why that was so important to me. But hopefully you can learn from my mistake and understand that the ability to time a bubble, whether that was the GFC or the dot-com bubble or tulip mania even, you listen back to those stories and you're like, I wouldn't have been that dumb. Oh my God, everyone was buying pets.com or books.com. They deserve to lose their money. Or everyone was buying subprime mortgages. Of course it was going to drop. You just think that with hindsight, you would have reacted differently. And to be in it right now and to go, oh, the bubble's definitely done. Guys, it is almost August. It is almost 11 months since I thought the AI bubble would burst, and it has not burst. And I just know after I record this, I promise you a week later it will pop or something else will happen. I'll be like, the bubble will not burst. We don't know when it will burst. And then it will genuinely burst the day later. It'll be guys, the market will be symbol NVIDIA shares, drop the bomb, let it out. Do you know what I mean? You just never know when markets are going to react. And so the best thing to do to protect your money, because at the end of the day, you just want to invest. You don't want to lose money. You just want to be able to sleep easy at night, and trying to time the market is not the way to do it. So learn from my mistake, besties. Learn from the mistake of Sim so that you do not make the same mistake. And hopefully this is a good reminder that I'm not a perfect investor. Sometimes I run into the besties on the street or in my emails, and we'll be chatting and they'll think I have all the answers, or that I know everything, or Sim, what's the market going to do? And I'm I don't know. And sometimes people think I'm gatekeeping that information, but hopefully now you know that when I say, I don't know, I mean it. There is no one on this earth that can say with full hand on heart that the share market is definitely going to go up tomorrow, or definitely going to go down tomorrow, or it's definitely going to burst next month or the month after. And I tried to give that a go, and I was so completely wrong, but it's a good lesson because I have learned where my skill set ends, and it ended pretty early. And now I'm going to just keep focusing on dollar cost averaging, investing in my broad market index funds and my core portfolio. And whilst I will still have my satellite portfolio to invest in individual companies, I understand that that is more of a speculative investment style. And it's not something that I'm going to put money into if I'm scared of losing that money. So I hope you found this episode helpful. I hope that you have learned from my mistake, and I don't even want to see NVIDIA's like ticker. I don't want to see the name NVIDIA for like at least a month. I need to like go non-contact with NVIDIA. This is where I'm at mentally. I've come to accept it. Now, if you've enjoyed this episode, please take a screenshot, put it on your Instagram story, tag friends that invest. It is the best way for us to grow the podcast, to reach more women, because what more can we ask for than more women learning about investing, getting more financially literate, and not losing money in NVIDIA. So with that, I'll see you next week.